Can you see the chat now?
Chat?
Yeah.
Oh, yeah, I can see the chat.
So I'll just try to remove the candles and have a plain background. Let me pick something else. Hiding the candle, so I just want to explain what the trend line is. Let's say we have this. You see the market going this way.
Sorry, 1 second, 1 second.
Okay.
I'll just get my notes. All right. All right, you can go ahead.
Okay. So let's just identify these trends. Okay. Now the blue trend is what?
Or uptrend, yeah?
Yeah, the red.
Yeah, downtrend.
Okay, how about this?
So you said there's 3 kind of trends, yeah?
Yeah.
So the up, down, and what? And or you show me or I thought? Oh yeah, that.
How about the yellow one? This.
I'm not sure. I'm not sure.
This is just a trending market or a choppy trend.
Oh what? Sorry.
A trending market or a choppy trend, like CHOPPY.
Oh, choppy trend.
Like choppy.
Yeah, I got you. Thanks.
You get?
All right. Share last.
You can see this, right?
Yeah, I can see it.
Okay.
Don't worry about it. If I can't see something, I'll let you know.
Okay.
Just go ahead.
So this is an uptrend and uptrend, downtrend, a choppy trend. So in an uptrend, we have series of higher highs and higher lows. The uptrend uses the prefix high, like HIGH.
Yeah.
That says the higher high, the higher low. Then downtrend uses the prefix low, the lower high, the lower low. So let me just represent this with something. One minute. Okay. You can still see my screen, right?
I can see it. Can you?
Now the A's stands for higher highs. Are you with me?
Yeah, okay.
The A stands for higher highs. The A is for higher highs and the B for higher lows.
Mm.
So for an uptrend, we use the prefix high.
Mm.
Then the B higher lows. You grab. Then for the downtrend, let's call this C. Are you still with me?
Yeah, I can see it.
Yeah. So the C stands for lower high and the D stands for lower low. Then for the choppy trend, just this part, the top stands for high and the bottom here stands for lows. You grab.
Yeah.
So for the uptrend, we use the prefix high, higher highs, irrespective of the position. This is a higher high. This level is a higher high. Then the
Mm.
retracement is a higher low. Then this
Mm.
other part is another higher high. Then the B
Mm.
part, a higher low.
Mm.
You grab.
Mm-hmm.
Then for the downtrend, the C part is the lower high. We use the prefix lower. The lower high, then the D, the lower low. The top again, the lower high, lower low. Are you following?
Mm. Yep.
Okay, so that about trends. Just to get the meaning. And don't forget, for an uptrend, we have series of higher highs and higher lows. For a
Mm-hmm.
downtrend, we have series of lower highs and
Lower.
lower lows.
For the choppy, you said it was highs and lows, right?
Yeah,
So
no, higher highs. For the choppy trend of which,
for the choppy trend.
yeah, series of highs and lows, but they might
Okay.
not always be on equal levels. Let me
Mm.
show you something. Let's say you have something like this. You can see this.
Mm.
You can see this has no specific direction.
Yeah.
So this is still a choppy trend.
Gotcha.
Still a choppy trend. It hasn't. You can't say whether it is going high or low or something. So it has no specific direction. Still a choppy trend. So I'll be using an uptrend for an example now. Let's say you have this. As for an uptrend, we have series of higher highs and higher lows. So starting from this point, this is a low, this is a high, this is a higher low, higher than the former low. Take notes, they are not on the same horizontal position. It's higher than the previous low. So this is a higher low compared to this. This is a higher high, a higher low, a higher high compared to this, higher than this previous high. So we call it, that's why they call it a higher high. Then a higher low, higher than the previous low. Then this is another higher high. So this move, it's an uptrend. So from points, let's call this low point A. Let me just put the text there. Points. Let's call this B. Let's call this point C. Let's call this C. Let's call this point D. So from point A to point B is an impulsive move.
Impulsive move?
Yeah, like impulse.
Gotcha.
Then from B to C is a retracement or a reversal. You know, ideally it's an uptrend, so we're expecting it to go up. But points B to C is not actually going up, it's coming down, going against the trend. But the general trend is still, you can still point, you can still call this a direction. It's going high, but from B to C, you can't say B to C is going up. But generally, this trend is in this direction. You grab.
Gotcha.
Yeah. So point B to C is a kind of reversal. We call it reversal or a retracement. Then from point C to D is another impulsive move. And if you notice, A to B has a longer length compared to B to C. A to B is longer than B to C. C to D is longer than, let's say, D to E.
Yeah. Does the length matter though? Or just like does the length matter?
Yeah, sometimes.
Okay.
Sometimes it does.
So I was so for example, if B to C is longer than A to B, is that possible?
I would let you know when how to decide if the trend is still valid or not. This
Okay.
is, you know, this is one. A is a low.
Okay.
Let's say you have C coming this way.
All right.
You grab. So now C, my point C now has broken the horizontal point here.
So it's low now.
This would still get there, but I just wanted to get the concept of
I don't know.
this. Yeah. So you can see point C broke below A. So at that point C now, we can see that there is a break in structure, because generally this is a structure. This is an uptrend, is a structure. So from point B to C, at this point C now, let's say you have no D or E or whatever, but the fact that it has broken this horizontal level, then I can't call it an uptrend anymore. It has broken the structure. If, let's say, okay, let's do it this way. Let's say you still have your C valid. Let's say you still have your C valid. And this continues. Or, okay. Let's say D pulls back. Instead of going higher, D pulls back and breaks this level. So now the trend is broken. It's no longer an uptrend. From point A to B is an impulsive move for the uptrend. B to C is a reversal. C to D is another impulsive move. But from D to this point, let's call this point E. I can't call point E an uptrend anymore because it broke the last valid lower, the last valid higher low. I told you an uptrend consists of series of higher highs and higher lows. So point C is the last valid higher low, and point B, the impulsive move from point D, broke that level. That is at this point. So this point now is a break in structure. You still with me, right?
Yeah.
So now there is a break in structure here. So I can't call this an uptrend anymore. It has broken structure. And this is like one of the most profitable trades after when there's a change in trend. We'll still get there. You just get the concept.
Can you imagine?
An uptrend have a series of higher highs and higher lows. Then a downtrend has a series of lower highs and lower lows. When for an uptrend, when an impulsive move breaks, or let's say when a reversal rather breaks the last valid higher low for an uptrend, then the trend changes to a downtrend. The uptrend is no longer valid.
Okay, gosh.
But there are cases where this can happen and you'd still see a move like this back to the upside. Banks do this a lot. That's the big guys in the market. They do this a lot just to make people go into losses. You know, ideally, if everyone is buying, then there will be no one to sell.
Yeah.
Would still get there. It's called stop hunt. Let's say for you to buy, there must be someone else on the other end selling.
Okay.
Get just like supply and demand. For you to buy, there must be someone at the other end selling. So let's say the banks wants to buy from this point. Every other trader, this very point now, every other trader would understand that, okay, this is a resistance zone. We'd still talk about support, resistance, and likes. Let's say this is a zone to buy. I know it's a zone to buy. Trader B, trader C, E, D to Z knows that this point is a buying zone. We would all want to buy, then there will be no one to sell. You get?
Yep.
So let's say the bank wants to buy now. They won't have enough volume to buy. There will be no, let me use okay. Let's use card JPY for instance. This very charts, Canadian dollar, Japanese yen. Let's say I want to buy card JPY at this point. Trader B, C wants to buy card JPY at this point. And let's say the volume we have left for card JPY is, let's say 100 units for instance. And I bought 20, trader B buys another 20, then we'll have 80 left. And let's say the bank wants to buy about 1,000 volumes. You can see that they won't have enough to buy. So what the bank does is that they sell at this point. Then they make traders to believe that, okay, the trend has changed. Then everyone starts selling down to this point. Then the bank reverses, they start buying again from this point. So let's say the people who bought at this point at first would have made losses. Then the bank starts selling. The people who are selling again at this point will make another loss again because the bank will now make the market reverse because they are buying in a higher volume. You understand?
Mhm. Yeah.
And so they are buying in a higher volume. Then the market would, the trend would change back to an uptrend. We'll get there and
So
I'll show
people,
you when such instances occur, or how to know and how to avoid losses in such cases.
so just one question. So the people who bought before, like the first people who bought, like, did they make like on gains now after the bank changed?
Sorry, let me use
After the
my
bank,
earplugs. I can't hear you.
oh my fault. Can
Look,
you hear me? Yeah, so like the people who bought first, like, who bought like when before the bank started to sell, like after the bank reverses it, like are they gonna make gains now?
yeah, sure. Do you
Yeah,
mean the banks now or the people buying?
people who bought like first, when the bank was
No,
selling,
yeah.
or
The people who
people
bought at
bought just
first, if they
yeah,
placed no stop loss, there's what's called stop loss. If there is no, can you see hear me?
yeah, okay, yeah, I can
Yeah.
hear you.
Okay. Let's say they bought at this region here.
Okay,
Let me put something there. One minute, please. Okay. Let's say they bought at this green region. You know
yeah,
it's an uptrend. They're predicting the markets to go higher.
yeah,
Okay. Let's say they bought at this green region. Ideally, they would place a stop loss around here. You know what a stop loss is, right?
yeah.
Let me change them. Let's use this. Ideally, their stop loss would be around this red region.
Okay,
Ideally, their stop loss would be around the red region. You grab.
yeah, I got you.
Yeah. So the banks would have taken them out around here. They would have made losses here. And most of them would have jumped back into the trade. Now they'll start selling from this point where it hits their stop loss, because the move will be very fast and they will think it's already a change in trade, and they will start selling already.
Okay,
So now let's say they sell to this region and they place their stop loss above again. Now the market would reverse again in the up direction. That is why most
yeah,
people, when you've done your analysis already, you see it's an uptrend,
yeah,
then you buy. And funny enough, it reverses, hits your stop loss, and starts going in your predicted direction. I don't know if such
okay.
has happened to you before.
No, 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 really.
Yeah, there are cases where you would buy, then the market reverses, hits your stop loss, and then starts going in your direction, in the first analyzed direction. So that
Yeah.
is how the bank takes people out, basically.
Uh, so
Yeah.
basically, if it hits your stop loss, and sorry, can I? That I was saying, so basically, if it hits your stop loss and then reverses, like you basically don't make any gains
Yeah, yeah. So in fact, you
because
can
you
have
already hit.
job losses at that point.
Oh, okay, so that's how. Okay, makes sense.
That's top points. I'll still talk more about that.
Oh, gotcha.
Yeah. So now you understand the trends, right? Uptrend, downtrend, choppy trend. I'll still talk more on this. This is more like an introduction. There's still more to it. There's still more to it. So we've not started today's class at all.
Sorry.
We've not started today's class at all.
Yeah, I mean, I could tell
Yeah.
you're
So
very.
about
Yeah.
technical analysis. There are different types of analysis. We have the technical analysis, we have the fundamental analysis. We have the sentimental analysis, and I would explain everything. For the technical analysis, this is where we use our tools here. Okay, this platform is TradingView. Have you used TradingView before?
Mhm.
Huh?
Yeah.
Okay. This platform is TradingView. Is just for analysis. You can't pick trades directly from this platform. You just do your analysis here, then go back to your MT5 or MT4 and pick your trade. So this platform is just for analysis. It has a lot of tools compared to MT4, MT5. So this is just for you to my meeting. Hello, are you there?
Yeah. I was just about to like tell you cut off.
Where did I stop?
You were talking about the trading view, like the analysis stuff.
Okay, okay. Let me share my screen. So this is just a platform for running your analysis. You can't pick trades here.
Okay.
You grab.
Yep.
So you just do your analysis here, then go to your MT4, MT5 and pick your trades. So this is just for you to run your analysis.
Mm.
Hello?
Yeah, I can hear you. Yeah.
Okay.
All right.
I would show you more on these tools later. I would explain how they work. So I was explaining analysis, types of analysis. We have the technical analysis. That's what we are doing now. The use of tools, supply and demand zones, just basically the use of tools to predict and to analyze the market. Then we have the fundamental analysis. That's where you listen to news.
Okay.
You grab
Mm-hmm.
that's news trading. Like some people don't use these platforms at all. They don't use these platforms. They just sit on their screen and probably CNN or whatever, BBC. They listen to business news and pick their trades based on that news. So that is fundamental analysis. The meeting might end in like 10 minutes. So you join again with the same link. You grab,
Okay, no worries.
yeah. So they pick their trades based on the news. Let's say um God forbid there's an earthquake in China. It's going to affect the Chinese yuan. So at that moment, they start selling Chinese yuan. You grab.
Yeah,
Are you following?
gotcha. Yeah.
Yeah.
I was just wait. Chinese, what's the currency again? Sorry, I was just.
Chinese yuan.
Oh, okay, gotcha.
Yeah. So at that point, they would start selling Chinese yuan because they've listened to the news already and there's an earthquake. So investors might start leaving the country or
Okay.
migration or reduce it to affect their currency like big time. So people would start leaving the country and it would cause how would I put it? Like a devaluation to their currency kind of.
Okay, gotcha.
Yeah. So they trade based on the news they hear. That is for fundamental analysis.
Mm.
So there are times where you combine fundamental analysis with technical analysis to pick trades. That is based for currency pairs.
Gotcha.
But for indices, that's the one we will run where I showed where the account you created the other day.
Yeah.
That one does not work based on news at all.
Okay.
It's more like an algorithm
Okay.
that works based on market conditions.
You gonna explain more on that?
You said?
So you're gonna you are you gonna explain more on what you mean by algorithm or
Yeah, sure.
indices?
Like, for CAD Japanese yen now, the present chart we are, let's say if
Yeah.
something goes wrong in Japan, God forbid, an earthquake,
Mm,
war or whatever, it will affect the currency. There would be a drop
mm,
in the value of Japanese yen.
okay.
But for synthetic indices, it is not affected by news.
Oh yeah, for
It is
sure.
not affected by any weather condition, whatever, migrants or whatever. It works based
Yeah.
on algorithm so that, okay, buyers and sellers, price action.
Okay.
When you buy, it affects the market. When you sell, it affects the market. But it does not, it's not based on news at all.
Okay.
Let's say the USD, for instance, when at, I think once in 3 months or monthly, there's what's called non-farmers payroll. When
Mm-hmm.
the news is about to come out, you see people eager to trade. Some would want to buy, some would want to sell, because there are
Mm-hmm.
series of moves that would happen in that time. Or let's say there is, okay, election periods when Trump was about to leave the seat. So such
Mm-hmm.
news affects the currency. It can cause a drop in the value of the currency. Or during this pandemic, a lot of countries suffered that, especially US.
Uh,
So it can cause a drop in their currency. But for synthetic indices, it does not work based on that. It works on algorithms so that it acts as if how do I put it? As if it works based on news, but in the real sense, it is not controlled by the news.
okay.
For currency pairs now, it's decentralized. It has no particular location. It's not owned by anyone.
Okay.
There is no, there can't be any rule from any country that would just ban currency pairs that would affect the whole world. It's not possible.
Okay.
But for synthetic indices, it's owned by someone. It's owned by Deriv for that particular synthetic indices. We
But
have other types of indices,
uh,
but for synthetic indices, it's owned by Deriv. So they created a kind of algorithm that would make it act in a real market condition.
mm-hmm.
So what we are actually trading is more like an algorithm from a real market condition, but it is not affected by news.
Yeah, okay.
Currency pairs, you can't trade currency pairs in weekends. Friday, I think it closes Friday 5 p.m. here.
Okay.
Friday 5 p.m. until Sunday 10 or 11 p.m. before the market opens. But synthetic indices, you can trade 24 hours. For currency pairs, we have different trading sessions. We have the London session, the New York session, the Sydney session. We start basically the Asian session as well. We start the day with the Sydney session, then to the Asian session, to the London session, then down to the New York session. So for Sydney session, that's for Sydney, the Asian, the Chinese, the Japanese, that's their own session. We have different time zones. So
Yeah.
like here in Nigeria now, this is evening. The trading might not be as much, the volume, the buying or selling volume might not be as much as when it is day, because now the
Yeah.
banks are closed.
Yeah.
But let's say your place now, it might still be on, the volume might still be high compared to here in Nigeria.
Yeah, for sure.
So we have different sessions. Those sessions affect currency pair, but they do not affect synthetic indices.
Mm.
Um, what else? Okay, that's for sessions. We'll still talk more on sessions too under currency
Uh,
pair. We'll still talk more on sessions. So that is then technical analysis. I've explained to the fundamental analysis where you trade based on news. Then technical analysis where you trade based on tools, which is what we're focusing on basically.
okay.
Then the last one is the sentiment analysis. this one you trade based on other people's review. Let's say we have 10 traders. Let's traders 1 to 10. If 5 people, or let's say if 8 people says the market is going to rise and 2 is saying the market would fall, so it will give you the percentage of those buying and those selling. So you pick your trade based on that percentage. You grab.
Okay. Yeah.
Yeah. So it picks trade. You run your
So,
analysis
just a quick
based on
question.
other people's idea.
Okay.
Yeah. So
Sorry, just a quick
okay.
question. So if uh, a trader says to buy and like multiple people are
That
buying, maybe the right,
my network is
the trend
breaking.
was
Can
up.
you come again?
Oh, well, okay, I'll repeat it. So what I said was, for example, if a trader says like, or maybe I should write in the chat. He's
Okay.
like, yeah, maybe I should write in the chat.
Okay.
Oh, can you hear me right now?
Yeah, I can hear you now.
Okay, I said like if a trader says to buy and all, for example, if the trader says he's gonna go on uptrend and like is 80% uptrend, 20% down, and like basically uptrend you buy, right? So most people buy and you buy as well, like,
Yeah,
and the
yeah,
trader
exactly.
got make it right, you make
Yeah.
profit then. Okay, I just wanted to like, I just wanted to clarify that because you
Okay.
said
But now
something about like
it's
if
not
they
just one
buy,
trader's
yeah, it was
decision.
just fine. Yeah, I know. I'm
Yeah, yeah.
saying like if the percentage is like 8%,
Yeah, exactly. So that's for analysis. So the first thing we'll be doing now, it's when you open your charts, the first thing you should do is top to down analysis. When you want to run your analysis or when you want to analyze the markets, you don't just go to the 1 minute, 1 hour and pick your decision based on that. You go down to a higher time frame, top to down. That is, if possible, the highest time frame available.
okay,
Then down to the lower time frame. You grab,
okay.
let's say, okay, we can even start with this Canadian dollar, Japanese yen. I won't just come and go to my maybe 1 minute, 1 hour because that would
He's
show me
gonna
the temporary trade, the